Hello and welcome to the week ahead from beautiful and sunny California. I'm coming at you late this weekend. It's currently Sunday, October 5th, about 6 p.m. here in California. And I want to go over this week. I'm going to try to keep it short and sweet, just looking at the market and where we're at right now from a bull's perspective and from a bear's perspective. And because I'm kind of trying to wear both glasses at the same time and see what does each side see and use that to form a narrative for each side going forward into the week, so I can kind of be aware of what's ticking the boxes for which side. And so I sort of have a breakdown of the bull side and then what the bears think about that. So starting here with the bull side, every drop has been bought up, and that's absolutely true in this rally. Ever since the tariff bottom was set, we've been going up and up and up and up and up. Every time we've had a pullback, it's been bought. So let's just take a quick look at that using the cues, my favorite. So here was the bottom, first dip bought right there. Then every little subsequent daily higher low is bought, and we rode the blue line here. I got a lot of blue lines, but this dark blue line here is the daily EMA 12, and that has been holding and holding and holding all the way up until here, where it was really violated. But even when it violated that, I have this light blue line and I sort of another blue line here. So this light blue line is the 50-day simple moving average, and this one here is the weekly EMA 12. And those two kind of follow each other pretty closely. I like to use both of them because I know a lot of traders use the 50-day simple moving average, and it does vary from the weekly, but I personally prefer the weekly. I find it does a better job of catching price. And so you can see we weren't able to get to it there. We came up down here and tried again. Finally, we tagged the 50-day here and didn't quite get to the weekly, and then we carried on again. So on the first dip here, it was out in open air. Then we broke above all of the moving averages, including the 200, and then every subsequent one after that was caught by the daily EMA 12 until here it tried to get lower than the daily EMA 12. It did, but couldn't get to the weekly or the 50. Came back up, tried again, couldn't get to the 50. Here it finally got it. Okay, so now we have a 50 tag, and then we rallied pretty strongly off the 50, right? So that's good. The next daily higher low we got was here, touched the EMA 12, also touched the back test of this high here, and then the next one held the EMA 12 again, held it again, and now this most recent pullback that we had on Friday was holding the 5-day simple moving average. So my point is that every time we set another deep pull in, it's getting higher and higher and higher. And at some point, one of those moving averages is going to fail, or maybe multiple of them will fail. And so, yes, from a bull perspective, we keep pushing higher and higher and higher. From a bear's perspective, it's just a little harder to keep it holding every time. At some point you've got to break that and come in for a deeper consolidation. Doesn't mean the market's topping, doesn't mean it's the end of the rally. It just means it would make sense sometime soon to have a deeper pull in from a bear's perspective. Meanwhile, the bulls are just like, no, we're just going to buy every dip. Okay, so the next point here is that there was no excess high last week. And you can kind of see it if you just look at the regular chart. So here, this is QQQ. You can see we've sort of got a double top here on the Thursday and Friday of last week. And let's just take a quick look at SPY. SPY did have a bit of an excess high, but let's take a look at ES. Because I think when Jim Dalton's looking at this, he's looking at ES. So this looks like a bit of an excess high with this peak and then drop. But let's take a look at the profile. So this is from Jim Dalton's week ahead video, and he talks about how basically between the various sessions, the overnight session and then the regular session, there's this basic flat top. Now, this right here is what an excess high kind of looks like, where you get a single print, for some period of time, there was a spike up that came all the way back down during this, in this case, it was the A period. So typically, market tops are not set unless there is an excess high. You can think of even blow-off tops, right? Blow-off tops, they don't hang out at the top for a really long time and then drop. They sort of blow really fast and then come down really fast. And so with no excess high, it's more of a likelihood that top is going to be tested again. And so from a bull's perspective, they're like, well, there's no excess high. Chances are we're going to push through the high that's already there. From a bear's perspective, all you can really say is, well, that's a nice rule to have, but it's not necessarily always true. If that were true, maybe there would be no such thing as double tops. Anyway, so that's something to consider. Then, we keep having, the next point is we keep having rotation to different areas that prevents this total rinse. So we've seen things go absolutely crazy in metals. We've seen things go crazy with quantum. We've seen things go crazy with nuclear stocks. And we keep finding other places to rotate the money. And even in the ETFs, we've had XLF has been pulling it back a bit, but meanwhile XLV has actually been having its strongest month ever. in a long time, sorry, not ever, and it's strongest month in many months. And so, there's rotation happening, and whenever money is coming out of one place and going into another, that's generally bullish for the market because it means that there's no fear. If money starts coming out of the market and you see everything falling at once, that's a real sign of weakness, and that's not great for the market overall. But that's not what we're seeing at all. However, from the bears' perspective, even though we've been having this rotation that's preventing a full, fear dump, there have been signs of weakness. So I mentioned a couple that I've seen here. So NVIDIA had that break. Let's take a really quick look at that. So NVIDIA had this range that had been building. And actually, if you look at it on the weekly time frame, I think it was, it set this weekly higher low, and then started pushing up out of that. Go to the daily time frame. It had this flat top, and it had a breakout of it. And this breakout, honestly, like I've been trading it. I bought the breakout. I made some money on this move, but I'm looking at all these other stocks moving, and NVIDIA is just kind of crawling, and it's like it can't get ahead of itself at all. And then it did have a deep pull in on Friday, which it did, in all fairness, it did push back up from. But this to me is not the NVIDIA of days before or days gone by, where you build a multi-week base and then you break out of it and you don't have like huge follow through on volume. Look at the volume on the breakout. So on this day of the breakout, it was above average volume. The dots, the purple dots here are the average. And so on this day of the breakout, there was higher than average volume. Every subsequent day, lower, lower, lower. Even on Friday, it was like the lowest yet, I think. Anyway, so not strength. It's not what you want to see from one of the strongest stocks in the market. And so I think that if NVIDIA rolls over, then tech in general is probably going to see some serious consolidation, if for no other reason that NVIDIA's got a really heavy weighting in the NASDAQ. Then we've got weakness in the Mag 7. So Amazon is now below the 50-day, below the weekly, below the 12-day, or the daily EMA 12, below the 20-day simple moving average, still holding the 200, but the 200 is now curling down. So that's not a good look for Amazon. We've got Meta. Meta set this fresh top and almost did a double top, but then it's essentially a lower high and is now rolling over. So it's under the 50, it's under the 20, it's under the weekly EMA 12, it's under the 5-day. It's coming back down towards the 200, and it's about to fill this gap. It didn't quite fill it last week. So this is basically a head and shoulders look here on Meta, and none of this is terrible. I don't think it's the end of the world, but everything's starting to curl over. Everything you're starting to see these signs. So this is the bear's perspective. And then finally PLTR. Let's just take a look at that. What happened to PLTR? Look at Friday. Erased, a couple weeks of upwards action in a single day on Friday, and is now got below the 20, still above the 50. But let's see what happens. It's got this nice base over here that could be a place where buyers show up. We'll have to wait and see, what's going to happen here. But this, I guess it could be just a tightening range. So let's, here high, low, lower high, maybe a higher low, maybe another top. Like who knows what's going to happen? It might set another lower high and then come down. So we'll have to wait and see. But either way, it's not like a surefire thing like it has been in the past, where just buy Palantir, the thing's going up. APP finally saw a bit of rollover. I don't think it's the end of the world, but there's that. And then other stocks like the quantum ones. So we did have IONQ, which is the leader in quantum, set a daily higher low. And actually, this was a beautiful retracement. I think it was a 382 retracement. Yeah, 382 perfectly from that low to this high. And then a bounce from there. And now this week, one of the things that I'm watching is IONQ going to push through to fresh highs, or is it going to reject this and roll over? Because if it rejects and rolls over, that's another sign that the bulls aren't in full control anymore. We got RGTI with this crazy beautiful higher low and breakout, but it's now it's had one gap up. We'll see if it gets another gap up. The more gap ups you have, the higher likelihood that this thing could reverse. It is on increasing volume on this move up. Maybe we're getting near a blow off. Don't know. QBTS, similar look. QUBT, not quite the same, but pushing towards the all-time high here. So anyway, things going a little crazy. The big tech names starting to show some signs of rolling over, while these other names like quantum are showing euphoria basically, and so I'm watching them. I'm watching to see, are we going to see any signs of the reversal coming, especially right off the open. I'm going to be paying very close attention to what these names do. We do have new themes starting to show up. So I mentioned XLV. Let's take a quick look at that chart. Head and shoulders down, and now we're basically pushing our way back up out of that. We held within all this action here. You can imagine that there's a nice volume profile in here. You can even just draw it on there. So it held the top of this value area from before and is pushing back up. Look at it on the weekly, confirmed weekly uptrend with gusto on volume, and just look at this run that's happening. So XLV doing stuff that it hasn't been doing in a long time. XBI also really pushing things here. Look at it in 1 month. Nice push out of this test of the lows, pushing back up now. We'll see what happens in the coming week. Is this resistance here going to hold, or is it going to push on through? So yeah, a lot of stuff happening in areas other than what we've been seeing in tech and nukes and stuff like that. There are new themes. There is place the money is rotating, but things are very extended. So you gotta be wary and not, especially don't be jumping into the trade at the top floor, because if the floor falls out from under you, you will lose. And then finally, the last thing that I had here is earlier in the week, I think it was on Thursday, in Wall Street Jesus from the Steam Room was giving his update on YouTube, and I saw in there that he was saying that Sharpies are unhedged, which is pretty remarkable given the stock market right now. So what that means is, in case you don't know what Sharpies are and you don't know, so Sharpies are basically the dudes who are in control of big money hedging. They look at how much risk is on, how much they're like, if their firms are net long, they're thinking about how can they hedge against that to cover the risk. And as of middle of the week last week, they were completely unhedged, which is wild when you think about where the market is right now. Now, because of the government shutdown that's happening right now, there was no new Sharpie data coming into the weekend, and so we don't know, are they still unhedged or are they hedged now? So, because between when the data came out and now, that could have completely changed. But as of middle of last week, they were not, and so that's, on the one hand, it was a good sign for the bulls, but on the other hand, we don't really know where they stand right now. So that's kind of it. Like, I think I look at the market right now and I think I'm cautiously optimistic, but I'm certainly not in thinking about putting on massive size trades right now. I think that if I'm going to be getting into any potential swings, I want to be looking in the themes where they haven't really run yet. So Bitcoin on the weekend it set a new all-time high and then pulled back a bit, which is what it did last time over here. And it is quite extended coming into here, but let's see. Does it wobble at the top, or does it completely roll over on Monday? I think that's actually going to be really important. If Bitcoin shows signs of holding up and potentially forming a bull flag and another tight base up here, that's a really good sign for the market. And it's definitely a good sign for these crypto stocks that are just beginning their runs. And there's a bunch of crypto names that have not yet even begun their runs. And so that's the kind of place I'll be looking for any potential long swings, is crypto and possibly some names in healthcare. So I've been building a short list of setups that I like, setups where the stock is not yet extended. And by that I mean above, but close to the 50-day simple moving average, possibly forming a tightening range or some sort of consolidation that could break out, getting close to the daily EMA 12, getting close to or above the weekly EMA 12. So BMNR is one that I'm interested in. It's holding above the weekly and the 50 right here, and you can see it's been holding there, holding here, holding again, and it's a tightening range. So getting tighter and tighter. This is one that when the break comes, I really want to be a part of this. So jumping back to the cues, I think when I look at this, I think, well, the last dip that was bought on the daily time frame here was this last Wednesday. So we had sort of set this double bottom back over here between Tuesday and Wednesday. So I think if those lows, that's what I want to see, those lows hold. If we see a further pull in, I need those to hold. It doesn't mean it's the end of the world if they don't hold. There is this other low down here that was a hold of the daily EMA 12. But I'm certainly going to be starting to think about, we've got a weekly stair step up here. If we lose this low right here, that is a stair step break on the weekly time frame, which is also why it's so important here. This low here, if it breaks, we are in weekly consolidation, and we're going to be looking for a weekly higher low. And so that's different than looking for a daily higher low. And it would make sense, if we're looking for a weekly higher low, you kind of want it to come back and test the weekly EMA 12 somewhere back over here. So you could see from a bear's perspective, you could see us, if we came down, bounced through that low, imagine the weekly EMA 12 keeps coming up, we could actually come in a bit of a downtrend and then start coming up out of it, something like that. But like I said earlier, we also still have this non-excess top. So what happens if Monday we shoot up and then we come back down, start testing these levels and then come back up? So something I'm thinking about. I'm not trying to catch the top of the market. I'm not trying to say that we're at a top. I just think consolidation would make sense, and we're seeing some signs of it in the market. So as long as the lows of Wednesday hold from this last week, I think we're in good shape. Otherwise, let's keep our eyes out for a weekly consolidation. All right, that's it for me. Have a good week and happy trading. Hey, if you like my indicators on TradingView and you like the content I'm producing here on this channel, please remember to like and subscribe.